Well, new developments such as dynamic charging already underway for EVs is opening a new avenue for the transition to electrification. So how should investors look at the future of powering electric vehicles? Here to discuss is Stacy Noblet, ICF Transportation Electrification Vice President, along with Craig Irwin, Roth Capital Partners Senior Research Analyst. Stacy, I'm going to start with you because I know you have been looking at the challenges of the EV infrastructure for some time. As you look at a technology like dynamic charging, where does it fit into the overall infrastructure?
No, it's a great question. And like you said in the opening, the prospect of wireless charging, of dynamic charging is extremely exciting. And one of the many innovations we're seeing out of the transportation electrification industry. As far as it fits in, I would predict that the fleet applications are more likely to be the first movers toward the dynamic charging option. We saw a lot of shuttle buses, certainly some bigger vehicles as well. So the opportunity for dynamic charging to serve those vehicles that are often, using the most electric miles potentially is pretty exciting, and what we're likely to see move first.
Craig, you obviously look at this from an investment standpoint. You're looking at the EV side of things. You're looking at the charging companies as well. Why has it been so difficult to get this infrastructure going, and who do you think is best positioned right now?
Wow. So infrastructure overall is actually starting to go reasonably well, right? There is still real cause for range anxiety. If you need to drive from A to B and you get to a charge station, it's down. It's never fun. Had that experience far too many times. Inductive charging as a technology actually is already working pretty well out there in the world. The one municipal fleet operator, Antelope Valley, also based in Los Angeles, has a fully electrified fleet of municipal buses. They run, using both legacy cable charging as well as inductive charging on many of their longest routes. So it does work. It is more expensive. It is a little bit more difficult to implement, but there are a number of startups here that are working, and it takes a lot of interest and a lot of innovation across the spectrum of solutions. Don't think that these larger companies are not looking at this. I wouldn't be surprised if maybe some of these companies were already pretty well invested here.
Yeah, Craig, I've learned throughout the story in reporting this that this is a technology that could potentially really expand adoption, but at the same time, it's still in its infancy in terms of coming to market. So if you think about where things stand right now, is it really about DC fast charging that could really supercharge this move towards electrification? And if that's the case, what are those charging companies that are out there that you think really offer value in trying to expand the market?
Well, DC fast charging is just one piece of the market right now. The piece of the market that seems to be working better is really level 2. DC fast charging has about $5 billion in federal funding from the infrastructure bill. It's slowly, very slowly finding its way into the market. And that's maybe even having a little bit of a detrimental impact on short-term volumes. So, longer term, this is the solution. If you want to drive from LA to New York, you got to do it with fast chargers. The biggest companies there are obviously ABB and Tritium, I would say, are probably the two that investors can play with. There are a number of other private ones in there. And then, the operators like Electrify America, are also very interesting because they provide a practical solution. EVgo as well, a leader there that's doing very well with DC fast charging for consumer vehicles predominantly.
Stacy, so much of the research that ICF does is really looking ahead to where this landscape could look like 10 years, 20 years down the line, specifically on charging. What does that breakdown look like for you? Is it going to be about home charging? Is it about fast charging? Is it about technology like dynamic charging? How do you see that breaking down?
All of the things. It really is an ecosystem approach for this. You think about where people keep their vehicles, where they need to travel to. We have to have charging solutions at each of those locations as well as along the way. And it's not just about putting the chargers in the ground and having them available. It's, as we've said, they need to be reliably available. And that's a workforce development issue, to be able to support not only the installation of the charging stations, but keeping them running, keeping the sites safe, lit, available, and again, we as EV drivers, they need to have a similar experience as internal combustion engine drivers to be able to pull in and know that they can get a full tank, whether it's through gas or electricity. But again, it needs to be kind of an all of the above solution, and not just passenger vehicles, but as we've mentioned, the fleet applications as well. That's really significant promise looking ahead in terms of electrified miles. So having fleet depot charging, but also not all of these fleets return to base at the end of the day. So they need the same reliability along their routes as we do as passenger vehicle drivers.
Craig, Tesla, the big name, of course, competing in the EV space. We have seen a big move towards the standardization of the charging network, with Tesla being the one that so many car makers have adopted, except for a select few. In terms of the charging network of the future, though, where does Tesla stand in all of that? Right now, we think of them as a car maker behind EVs with a very reliable charging system in place. But what are the opportunities you think Tesla can go for beyond just their current network?
So what is missed on this whole Tesla NACS expansion, and then Tesla opening up the network to other vendors? Think about how annoyed someone that's going to buy a Tesla that goes to a Tesla supercharger station is going to be when they have a Hummer and a Leaf and all sorts of other vehicles online in front of them. That's number one, brand impact. Number two, if you're buying that Hummer, or you're buying, the Chevy Lightning or whatever, right? If you're buying one of these other vehicles that many people find pretty compelling, you're going to pay quite a lot more for electricity at a Tesla network than you would, at another one of the independent networks, or particularly more than a Tesla driver. So, Tesla's going to have its place. Tesla is not everything. I think there's going to be a vibrant ecosystem of successful companies playing here. There's going to be some regional winners. There's going to be some international winners, many in between. Some will be focused on selling electrons. Others will be selling hardware. It's a broad-based solution, and EVs are inevitable. It's not just Tesla that's going to win.
Roth Capital's Craig Irwin, along with ICF's Stacy Noblet. Good to talk to both of you today. Really appreciate the time.
Thank you very much.